Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bhambwani, and in this video I want to talk to you about crude oil, a commodity that fascinates us, confounds us and bewilders us like no other. It's common knowledge amongst traders that crude oil is not just a commodity which you treat like a commodity. It's about geopolitics, it's about speculation, it's about financial premium, it's about terror premium, and it's also about a whole lot of pull and push between the buyers and the sellers. I have been making videos since at least 2 to 3 quarters saying why crude oil in terms of dollar denominated price, of course, and I'm talking of WTI, the Western Texas Intermediate grade of crude oil, will possibly not go to $100, or if it does go to $100, it will be a photo opportunity of just touch and go, and at that point in time, it's a good sell. Now, a lot of water has flown from under the bridge since I last made my video on crude oil, and I think my readers, my viewers and weekly cash alert subscribers deserve an update. You see, I wrote in a text interview on 12th of November 2021 with Equity Master, which I'm sure you would have read on Equity Master's website, that natural gas and crude oil are like the intestinal gas in a human being, or maybe even the urine that you hold in your bladder. It doesn't help you to keep it inside your body, just as the oil and gas selling companies and countries can't hold gas and oil in under the sands, buried under the sands, because it's not really earning them revenue. The one thing you have to understand is that creating an artificial shortage by cutting output, as OPEC has suggested, and I have said unequivocally in my past videos that OPEC and the others are trying to talk the markets up. If you've been reading my morning mails as an Equity Master subscriber, that they are trying to A, talk the market up, and B, trying to impact prices with their output hikes and or output cuts. Now, in the recent past, in the last 2 or 3 days, and I'm recording this video on Wednesday, which will be uploaded on Thursday, I saw OPEC actually brandishing the oil sword. Now, this is an event which occurred in 1970s when the Arabs embargoed the West, where oil supplies were concerned, after the Israelis hammered Lebanon in what is now known as the Yom Kippur War. So the Arabs cut the output of oil and supply of oil to the West. It is called brandishing the oil sword. After that, OPEC really in no uncertain terms said, if the buying nations were to touch their strategic petroleum reserve, which is dipping into their stored crude oil, we will cut back on the output hikes which we have promised at the rate of 4 lakh, that is 400,000 barrels per day. Now, this is like you and me saving for a rainy day, all right, and God forbid, for whatever financial distress, you lose your job or you lose money in a trade or whatever. Instead of going to a money lender and borrowing money on interest, you decide to break your fixed deposit and access your reserve. The money lender telling you, hey, I will not allow you to access your savings which you have amassed for a rainy day. In my humble opinion, I think OPEC is setting itself up for a lot of friction with its buyers if they insist on cutting output, if the buyers are basically accessing their strategic reserve. The strategic reserve belongs to the country which is holding it, and OPEC cannot really say, we will not allow you to access it. It's like saying you can't put your hands into your fixed deposits. All right. So currently, only the Saudis, Iraqis, and the United Arab Emirates have spare capacities. And it's not that there is no oil. It's that the other countries, including Kuwait, you will be surprised, Kuwait, a very rich country and a friend of America, is also feeling financial distress. They have time and again said they might run out of money to meet the national expenditure. So even Kuwait has not been able to invest money to basically explore for new oil wells, and in the existing oil wells to drill and something known as EOR, enhanced oil recovery techniques. It needs more money. Like for example, surfactants, detergents, steam, water is pumped at very high pressure into the oil head so that the oil basically comes up higher and you can extract it like low-hanging fruit. But that requires money, and only the Saudis, the Iraqis and the UAE have that kind of money or oil wells that are yielding spare capacity very easily. As a matter of fact, the OPEC Plus as a conglomerate, as a consortium, has fallen short of 730,000 barrels a day. That's 750,000 barrels a day as compared to their own self-appointed quota. Now, why is this output falling short? Because of primarily two nations. One is Angola and the other is Nigeria. Both are financially distressed nations. Both are, in the case of Nigeria, it's not just financial distress, it's also mismanagement. Exactly like what you're seeing in Venezuela. But what people are not noticing is that many of these countries, for example, Iran, for example, Venezuela, sell oil on the sly. So a lot of oil sales that Venezuela, etc., are trying to notch up is masked as off the records. So anything and everything that you see in commodities, what you see is true, but always keep your mind open to the fact that something that is exactly opposite can also be true. There is always the possibility of shadow inventories. There is always the possibility of off-the-books transactions, just like in any other market. So what has caused this pressure is the ESG, the environment-friendly activists have basically pressurized the oil drilling, marketing and refining companies to cut down their budget. But of late, I'm sensing that these guys are now saying, okay, we don't want to do this at the expense of inflation hitting us in the face, and therefore they might just back off a little. Currently, OPEC Plus's spare capacity is between 4 to 6 million barrels per day. So it's not that OPEC cannot raise the output. They have basically made the market nervous by announcing that they will roll back the oil output hike, which is supposed to go on till next year at the rate of 400,000 barrels a day. Will they actually confront their buyers and try to fight with the very countries to whom they are selling oil? I think it's a bluff. Why do I think so? Here, if you actually Google search as to how many oil exporting countries have issued bonds in the last 2 years alone, of course the debt prior to that is left aside. Now just calculate how many billions of dollars they have either notched up by way of fresh debt that they have taken, and remember this is sovereign debt. And the countries like UAE, which have not taken as much debt, have invested money in their state oil companies like ADNOC, Abu Dhabi National Oil Company, etc., to ramp up output in their oil or gas fields. The Wafra, the Khufji, you can basically Fujairah, right? The supergiant gas field that Saudi Arabia is spending $108 billion for. Do you think they can actually service and repay this debt by simply jacking up the price alone and not being able to sell at that price? Because demand destruction at higher levels in commodities is an undeniable fact. This is a pure case of playing chicken. Who blinks first? And now, unfortunately, it's coming to a point where the buyers and the sellers are coming towards a collision course. OPEC itself is saying that there is a possibility, a very high possibility, that 2022 will see surplus oil capacity available, because these countries which are selling oil at higher prices thanks to the shortages created will have the spare money to invest in enhanced oil recovery techniques. So the output will rise. What happens in 2022 when oil surplus goes up? What happens in 2022 when shale and other energy sources start to go up? What if the winter in 2021, starting from now, is not as harsh as it is feared? These are questions that you need to keep in your mind before starting to bet on $100, $200 and even $300 per barrel of crude oil. Amazing and bizarre figures that are floating around in the internet domain are claiming to be. I went on television on CNBC Awaz and CNBC English on behalf of Equity Master as early as May and April 2021, wherein I said I debunked the theory of $100+ per barrel of WTI crude. You know, if the guys who are pushing for $100 a barrel as price have to be taken seriously, do remember it's been more than 8 months since they've been saying that prices will go this far. So as Steve Buscemi said in Armageddon, are we going, are we not going, are we staying, are we going, make up your mind. So 8 months and not yet triple digit levels on WTI crude yet. If at all, and I reserve the right to go wrong, if at all the price does go there at $100, will Weekly Cash Alert subscribers get an SMS or a mobile app or an email alert telling you to act upon crude oil? As far as commonly known data available in the public domain as I record this video on this Wednesday is concerned, yes, you will get an alert to act accordingly. I don't think triple digit levels of oil will either hit, or if they hit, they will stay too long. I'm sticking my neck out. On this note, I bid goodbye to you in this video, not before reminding you to click like on this video if you agree with what you saw. Subscribe to my YouTube channel, click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment section, do let me know what you think about this video and help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. I thank you for your patience. Till we meet again in my next, this is Vijay Bhambwani signing off for now. I wish you have a very, very profitable day. Bye-bye.